Hi, let's cover my Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside in a wave 1 or A, look for a 3-wave corrective structure into B, and then continuation up to take out the high at 118K. Preferably wave 2 or B is finishing at least after this vertical line here on my chart, sitting on the 25th of September, 10 a.m. Central European time, which means that preferably this structure to the downside is not the end of 2 or B. There is two structures that I keep in mind as a correction inside 2 or B at the moment, which is, if this low holds, W, 3-wave zigzag, then get a move up in a wave X, and then get a wave Y to the downside, or a zigzag 1, 2, 3, 4, a 5-wave structure into some areas of support, get a 3-wave move to the upside, that's wave B, this is wave A, and then you get a 5-wave move down in a wave C. This then finishes wave 2 or B, and you look for continuation. Now the invalidation is very simple. That is this low here at 107.2K. You can see the areas of interest that I have here on my chart. To the upside, resistance here at 115.8, and to the downside you can see two volume levels that I find interesting as well. The volume levels are generally my favorite support or resistance levels. I do realize that price moved to the downside and actually pretty much touched the daily over here, a time frame horizontal, so I am aware, but I always keep an eye on the volume levels. Then we get to a, I suppose, more bearish scenario. I mean, especially you can imagine that retail that is not following Elliott Waves will get quite scared if price is going to move below this low, especially if that happens on volume. I drew this scenario to 105, but you could go as low as 96, which is still perfectly fine. So in this scenario, you're looking at a double zigzag. So A, B, C, W, corrective structure in X, which then by itself should be a zigzag family structure internally. And then you're looking for an A, B, C down, which means 5 waves to the downside in wave A, preferably not yet finished. 1, 2, 1, 2, 3, 4, 5, get another 4 and a 5 into areas of support, finish A, get a move up in a wave B, and I get a sharper, longer move to the downside in wave C to finish wave Y. And then preferably wave C, and therefore wave Y, is finishing around 105 or 96. Those are like the two main areas I have as support. I do have a daily naked point of control here as well at 101.5, but you get the idea. Preferably we're mixing these scenarios with areas of support and resistance. And then we have a larger corrective structure. So here the story on the, I suppose, short term is relatively similar, where you're basically looking for a bit of a move towards the upside. Now the scenario I'm looking at here is then a W zigzag, so A, triangle B, and then wave C, that's W, A, B, C to the downside in wave X, so that's a flat structure, and then looking for another A, B, C to the upside in Y, or alternatively, wave Y can be a more sideways structure like a flat or even a triangle, but that's stuff we can only figure out at a later stage. Right? It doesn't really matter at this moment in time. What is most important is that you want a 5-wave structure to the downside here, 1, 2, 3, 4, and a 5. So preferably one more low into support, finish C, therefore X, and then, which is different to some of the other scenarios, you want an impulsive move towards the upside or a motive wave. You want a 5-wave structure to the upside. While in the bearish double zigzag scenario, you're also looking for 5 down, but then a 3-wave move to the upside, not a 5. In the impulse scenario, the bullish scenario, here you are initially then looking for a 3 and then a move down. But once you're finished with this structure, you're looking for a 5-wave move to the upside as well, 3-wave correction, and then eventually continuation. But initially, after a low is formed here, we would look for a 3-wave move up, not a 5-wave move up. While in this WXY scenario, we're looking for 5, 3, 5, and then finish wave Y at some higher resistance levels. And then after wave Y, we look for a retracement to the downside. Now, talking about areas of resistance, we do have some small order blocks here in this area, right? The lowest one around 120.5, 121. But looking at the horizontal areas of resistance and support, you can see that we have some resistance at 121.8 volume, a little range point of control. You can also see there's a bit of a gap over here. I can toggle on the volume or the time frame horizontal levels, and you can see a weekly is popping up at 119.3. So this is basically all of the levels that I have going on in the range. If I only toggle on the volume levels, then you can see that there are a few pockets here and there that are interesting areas of support or resistance. But yeah, I've mainly covered the different scenarios with the levels that are most interesting in this current range. Then we have the news. We have some news today actually at 6:35 p.m. So please make sure you trade safe. It can increase the volatility on the chart. Then on Thursday and Friday, we also have news again. Check the time, Central European time zone. Please trade safe, right? And then we get to the probabilities. So on the number one position, based on the price action, we have here to the downside and the scenarios that we have been keeping an eye on, at least in this video, of course, and past content. Currently, we are looking here for a bit of a bounce to the upside. If we cover the scenarios in short, right, in a 2 or B, you're looking for a W, an X, and a Y, or 1, 2, 3, 4, 5, and then after your 5, you're looking for a move to the upside anyway. So that is the directional bias in both of these scenarios, with or without taking the low and testing the support. Now, I personally do prefer price to test areas of support, so that I then have the opportunity to observe what price does at those areas of support, and then maybe take a trade or not based on what I see according to my plan. Yes, price pretty much touched the daily level here, but first of all, I was asleep over here when this candle was printed, and second, I do prefer the volume levels, so that is just stuff I keep an eye on, so the 2 levels to the downside here. So what I write over here, right, so looking for a bounce in the second scenario, the WXY, you're looking for 4-5, get a bounce up in the B, so that's similar. And in the WXY to the upside, after a move down, look for price to move up as well. So you can see it becomes a bit more attractive to look for a bit of a bounce. So on the number 2 position, lower probabilities, a continuation to the downside to new lows instantly. So that basically means price is just going to do this. The probabilities are lower for such scenarios at the moment due to the size of this range, because we can only really go straight to the downside if we would count this as a multi-1-2 and a 1, a 2, 1, 2, and then get a large 3 down. But preferably in a multi-1-2 structure, it actually creates a little bit of a diagonal structure. So what you preferably see in a multi-1-2 is 1, 2, 1, 2, 1, 2, 3. And it looks like a diagonal, but instead of moving up to correct as a diagonal and then come down, you just fall straight to the downside. But that is clearly not the case. We don't have overlap between these ranges. Doesn't really look nice, so it's not preferred. And otherwise, we have to consider extended fifth waves in an impulse, 1, 2, 3, 4, and get an extended 5 to the downside. But an extended 5 is just a lot less common compared to a more traditional impulse where your wave 3 is the longest. 1, 2, 3, get a 4, get a shorter 5, and then a bounce, alternatively 1, 2, 1, 2, and a 3, 4, 5, 4, 5. But I already covered the fact that a multi-1-2 locally does not look like a highest probability scenario. So this is why preferably I keep my eyes, as price was moving to the down, or is moving to the downside here, I keep an eye on the areas of support and the potential signs of strength according to my plan. Just like when price was moving to the upside, we were looking for a retracement, and in many of my previous content I highlighted 118K as an important area of resistance. We touched it and price moved to the downside as well. So very, very nice. Just make sure you trade safe with the news coming up as well. So that being said, I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.